Hope you can hear me okay. This is Chris Brecher, usually in the Chart Patterns Mastery Room. In fact, I'm in front of my screen all day trying to show ideas, which today I don't have many. So I just want you to know that rough day in here because it's so slow. Usually what happens is after a big rally, the market, sort of like the second stage of a rocket, it just loses momentum, and then rolls over. But you don't have that yet. So this is about showing you panic trades before an event. This is not about showing you predictions of the market, but I just want to show you something. I'm not saying I'm playing this, but I wanted to show it. I post a ton on Stock Twits, and the reason is I can't post in every room all day, and also the races. So I have like a running commentary on Stock Twits. Have over 57,000 followers on there. But this is something I posted. This is just a ponder. I'm not saying this is going to happen. I don't know if everybody realizes that the German DAX is testing all-time highs. Now, I know you can say it's because of tariffs and all that stuff, but that's highly unusual. Highly unusual to have that kind of divergence. Now, I'm not saying on the right that's going to do the same thing whatsoever. I'm just pointing it out. I was also going way back to see if we ever had that massive a divergence before. And it's not easy to find. I just want you to know that it's not that easy to find. So, in fact, hardly ever, even with the other tariffs in other decades, it's extremely hard to find that divergence. So I just wanted you to see that. I find that sort of fascinating. But getting back to it about the markets, this is all about I try to make money any way I can. So if that means going in and playing puts at the end of the day, selling premium, all that stuff, I just want you to know there are a lot of ways to skin a cat, so to speak. So I want to show you something really interesting. And this is what happens before an economic event. Just can't stress it enough. So here's the Federal Reserve Board. This is the historical stuff. The calendars. So I'll just show you. Here's the calendars. So, and I'll put that over in the Restream room if I can. Now, the reason I'm showing this, like I said, I try to find all shapes and sizes of ways to make money. In the long run, selling premium is a great way to do it. But before an event, a lot of times not betting on the event. I just watched on a lot of sites, I watched 20% success betting on earnings or FOMC and all that stuff. 20%. I react beforehand or after. Anything I'm showing you is based on getting out on the close. But I just want to show you this of when the statements came out, not for the FOMC, but for the, let me get it up here. For this. This is the schedule of the employment report releases. This one's better. This is the one I'm talking about in an event prior to it happening because traders panic. And I'll show you what we mean because it's pretty dramatic. So we're going to go into here. I'm going to take this off because this will blow up my machine if I have too many things up. As you see how slow, that's because it's probably one of those performance problems detected. As you see how slow it is. There. Now we're going to go to this one. So we're just going to go to my normal stuff. And here's Tesla, but I want to show you what happened prior to the unemployment report last week. It was pretty cool. Now, there are a couple of things to show you first, and this is a big deal. So the first thing is about buyback blackouts. So companies voluntarily back stock 5 weeks prior to earnings. So, and they can't buy back the last 10 minutes. So just keep that in mind about the last 10 minutes and the buyback blackout. Why do I mention that? Because the preponderance of S&P stocks have already bought back, finished their earnings so they can resume buybacks. So combine that they can prop up the market, combine the traders like them before an event, like an FOMC, and combine they can't buy back stock the last 10 minutes. So that's what I want you to be set up on. The second thing I want to show you is a bearish pattern is more likely to work if companies can't buy back stock. Doesn't mean it's going down every day. What's this? And we're going to go and I'll show you an on demand. So we're going to go to May 2nd. May 2nd is the unemployment. May 1st is the day before the unemployment report. See that trend line? Right there. Bearish pattern is more likely to work if you have an event coming and you have lack of buybacks. So that little move is not that much, but I want to show you what happened to options then. Now I'm going to show you American Express, I'm going to show you Lockheed, and I'm going to show you the SPX. So the first thing we're going to do is we're going to take this as a 1 minute chart. You'll see it went down, no doubt about it. But the key is that this move, the puts didn't move much because premium decay. This one, they exploded. You can take advantage of that. So we're going to go and take, we call it the 1550 trade. See right there? That's 1550 right there. This is the day before the unemployment report. So the premium is not going to decay. It's going to explode. So let me give you a for instance. So we're going to go to 1504. I just want to show you this. Now, when you do this, if you're new to this kind of game, you can play out of the money. These are not the ones that expire that day. We're looking at the ones that expire the next day. So they're cash settled, the ones that day. We're not talking about that now. We're talking about the ones that expire the following day. So we're going to go into this, and we're going to go to the SPX, and we're going to go to the way out of the money. If you're new at this, you can play the out of the money, the way out of the money, because you probably have more, like, you're more inclined to play something cheap. So here you go. This is up 67. This is at up here. This is the rewind function of Thinkorswim. The rewind function. This is at 3:05 Eastern. So, you still have companies could be buying back stock. So remember, the most of the companies are already buying back stock. So it's going to be like the last 10 minutes when they can't is going to be more dramatic than when they're all in a buyback blackout. So take these 5,400 puts. You see on how they're 75.80? That's with an hour to go. Free money, they're out of the money. We don't care about that. We're not going to mess with that. Well, now what I'm going to show you is this. So this is 56.36. So if you take at 1530, that's why you don't want to do this too early. You want to mess around with this as close to 1550 as possible. So I'm taking 1530 or 330. So 330. It's pre-buffering on the upper left. So this is just a cool trader trick because you can buy out of the money puts and sometimes make some good money. Plus, if you're wrong, you're not going to lose a lot because it's going to keep premium into the event. So here you go. It's still up 69. So the 5,400, 80.90. Believe it or not, that's uptick to point, and those went up. So just keep this in the back of your mind. 80.90. 1530. Now we're going to go to 1545. And look on the upper left. You see it's 56.36. So we're going to 345. 1536. Those were 80.90, the 5400s. Remember that, 80.90. So it's pre-buffering. Give it a minute. Because I want you to see this because a lot of you like the idea of taking a shot like this, but you don't want to buy a $6 option. All right, it's the same spot. It's down a little, and these are the same because they're decaying. See that? Well, let's go to 1549. Remember, 56.33, they're 80.90 basically. 56.49. It went up. Yeah, 56.49. So we're the 5400, 70.80. So even if you bought them at 85 too early, you're all down all at $10. But watch what happens in the next 3 minutes. It's still pre-buffering. 56.39, 70.80. 95 at $1.05. Look at that, the 15.50 trade. So go and look at the chart. 15.50, it went straight down. These puts that were 85 cents are now 95 at $1.05. But that's only the beginning. That's only the beginning. Remember, traders panic before an event. You saw this trend line. So believe it or not, that trend line, there isn't a lot underneath. So you have lack of buybacks, and you have that people want to flatten before an event. And most companies were propping up the market probably beforehand. So I can show you on the right. It's pretty cool. You can right click, copy, right click, paste. There you go. There they are. So now take it 15.59 and watch what happens. There you go. $1.50. 15.50 trade. It went straight down. $1.50. Now, the thing about the SPX and the XSP, they don't expire till 4:15. So the SPY actually doesn't expire until 4:15. Also, you could screw around with that. But if you take the SPX, these things are $1.50. $1.50. At 15.59, you don't have to sell by 4 o'clock Eastern. You can wait till 4:15. They trade the following day, trades till 4:15. Watch what happened after the close if you don't think there's some panic going on. 4:50, 4:05. Those that you bought at 85 cents. Now, this went down, don't get me wrong, but they would have been pumped anyway because people get nervous. $2.30, you're up 200%. In fact, you could have screwed around with the 53.50s. The point is that happens all the time prior to an event. I can't tell you how many times I've seen that. So if you are questioning that, just go into the April one. Now, keep in mind, though, that the other, not the FOMC, I'm sorry, the unemployment, the one before, you weren't in the buyback. There were too many companies buying back stock. So you don't want the April one. It's not as important. It's once you go 3 months earlier. So, but I'll show you it anyway. We'll go to the April 4th. So, and I'll show you April 4th. And then I want to show you what happened to American Express. So April 4th, unemployment report. You want to go to April 3rd. And the markets were up, I think, but I'll show you what we're talking about. So I'll show you what we're talking about. And yes, this is live. It's YouTube live. All right. So it's pre-buffering. Now I'll show you what's going on in here. So there you go. Well, I don't know if that's right. Let me see. Well, that's the whole thing after the after the tariff stuff. But did it matter anyway? So what happened at 15.50? The markets got torn again. Not a lot, 10 points. But what happened on the right to not that day, but the next, well, April 4th. So where were the 5,000 put? Well, let's take the 5,100 puts. Here you go, $1.45. right here, $1.45. They exploded as well. So if you go back to here, even though this is a little funky because the whole market cracked, if you go to 1549, where were the 5100 puts? It's a little different because the whole market crapped out. But let's just look anyway. See, the low was only 55 cents on the bottom right. So this might not be as good. But many times when companies can't buy back stock the last 10 minutes, yeah, they were $1.10. So they went up 40%. Right at 15.50, they went up 40%. Pretty impressive. Now, I want to show you another one. We're going to go back to May, and I want to show you on how you can make money on these. Now, you got to understand that SPX closes at 415. SPY closes at 415. QQQ closes at 415. But individual equities close at 4. So you have to be a lot faster. But I thought I'd show you this is pretty cool. Here's American Express. All day the stock was up. All day. So we're going to take an American Express to 262.5 put. See on how it's up 4.5? All day it held up, even though a lot of other credit cards went down. Take the 262.5 puts, even the 260s. But see these? They're 54 cents. And you might say that's free money. They're 10 points out of the money with a day to go. All right, go and check out what happened at 15.50. So they're 50, 34 and 80. You probably could have bought them at 50 cents. All right, watch what happens 5 minutes later. 270.74. Just remember that. The whole market sold off. Remember that. So this is probably about 269. So, they're still way out of the money. You'd think they wouldn't move much. They're not going to move. They're free money to sell on naked. Watch what happens. 35.66, 34.80. 51.87, 72.85. These just doubled. The out money. The 60s just doubled. Can you believe that? Go back again. I'm going to just show you. 260 puts are like 40 cents right in here. 4 minutes later, they're 57. You can take advantage of that. And let me just tell you, watch what happens in the next 3 minutes. Now, you got to be fast on these. Got to be fast. But you could buy them in there. Look at that. 82, $1.25, 43, $1.05. I'm telling you, there are a lot of people short those suckers, especially when you see the volume of these. You could buy those at 55, throw into sell them at $1, and you'll probably get filled. But you better be fast. You don't want to be in for tomorrow. You can even leave this going. You'll see that's 268.69. And the next thing you notice, they go even higher. I mean, it's really impressive. Now they're $1 bid. Look at that. But now they're $1.94, $1.42. It's amazing how much they move. Now, we saw this in Lockheed as well. And what it means is if you're caught short puts, you want to buy them no matter what the price of the close. So if you bought them first, you can just throw in an offer and get filled. Look at Lockheed. Here's a really good one. We were playing that. So let's take Lockheed back here. Now, keep in mind, Lockheed didn't move much. Didn't move much at all, but the puts did. Now, they widen the markets, but if you're short the puts and you got to buy them back, you're going to pay whatever you can get. A lot of people, risk management-wise, don't want to be in them. So go and check out the 465 puts. Here you go. Bid 70, offer $1.05. Way out of the money. 13 points out of the money. Now fast forward about 6 minutes. Remember, you're looking 70, 105, 465 puts. That took till the last minute. Sorry. Let's see if it works. This one didn't. They widened a lot of them. There, like these at $1.10, $2.95. They were 45 cents. You probably could sell them at $2. So it's amazing. So let's go back again. Let's take a more in the money one. So American Express worked better because it trades more volume. But I'll just go and we'll show you the 1550 trade. So they widened them on you. The whole point is if you can buy them close to 1550 as you can, you usually can throw out to sell them again, like way above the market. We've seen it over and over and over work. So I just want to make that clear that you can take advantage of public panic. The more active the stock with the volume, the more likely this kind of trade will work. Let's go take JP Morgan. That trades a lot more options. So we're going to take 1549. I didn't even look at this one yet, but I bet it works. So let's see. So let's just take, and thanks for following me on StockTwits. I think I've showed a lot of content, and as you see, as opposed to a ton on Twitter, I post content, not bragging. So I love posting content, and let my subscribers brag me. So here you go. 247. Where are the 245 puts? Do they trade enough? Not really, but let's just see. 245 puts, they're 75 cents. All right, let's put in 1558. 245 puts. Survey says $1.02. Yeah, there you go. Kicking in gear. Isn't that amazing? 38 cents on these, about 55 cents. So I'm just telling you that on the close, right before 1550, on the day before an event, you can usually make some money lowballing some puts. Because even if you're wrong, they're not going to go anywhere because people don't want to be short them. So it's really cool on how that works. So how about SPY? Same as SPX, but I'll give you for instance. So we know the SPY got torched on the close. So we're going to take 1549. Because maybe you don't want to, and it's even more dramatic because these are all of 1/10 of the SPX basically. So let's take the 550 puts. They're $1.20. That's when it was going down though. How about 10 minutes right before 1550? Just take the 550 puts right down here, right there. 1549. You want to buy them right before 1550. Yeah, they're 53 cents. Look at that. Then you take the 15, let's say 15. So you're talking about 53 cents. Take it 2 minutes later. 73 cents. Take them right at 4 o'clock. Remember, they trade till 4:15. The next day's trade till 4:15. Remember, you were looking at them at 55 cents right before 1550. Where are they now? Right at 4 o'clock. $1.20. Now, what happens after the close? Is there a little more panic? There sure is. Where did the 1550 puts go? You'll see. So they were 55 cents. Where are they at 405? So if you're wondering if they trade or not, you'll see the red and green. There, they're trading. $1.50. Usually what we do is a thing called twosies. So at 1549, we won't buy one. What we'll do is buy two. multiple, multiples of 2. So you buy 2 at 55 cents. If you're wrong, they'll probably go to 45 cents. You'll lose 10 cents. Risk reward is great. So right here, if you buy a 2 lot, your goal is to sell half at $1, so the other one you have for free. So then you get out at the last minute. So equities, you have to get out by 4 o'clock. Probably have to start putting in your orders at 3:58. These trade till 5:15. So you buy a 2 lot. What's going to happen if it explodes? It'll probably go down 10 cents. If you're right, you'll probably make like 100%. So the risk reward is totally in your favor. So that's what that's all about. So because traders panic, plus you're combining this. I can't stress it enough. You're combining a trend line. So you're taking that trend line and you're saying it's a possible bearish. Now you might say, what happens if it breaks up? Yeah, you got to watch out for that. But overall, look what happened at 1550, exactly at 1550. The day before it broke up, but it wasn't before an event. This is before an event. So watch, I can just have it go real time. You can put a 5-minute. You can see it building. There you go. And then watch what happens with like at 1558. There. That's what happened. Because the lack of buybacks and traders wanting to flatten before the event. So we've seen this a lot with earnings stuff. But this was a great example of what happens prior to an event. No, we're talking about buying out of the money puts. This entire thing is about buying premium before an event, not shorting. We're buying premium. We're saying that other people are going to panic out of them. So you're buying out of the money puts. That's why I was showing that 55 cents and next thing they're $1.10. You're buying out of the money puts. So just fascinating to watch this happen. I'd say, well, how about the year before? It's a good question. So let's go to the year before. So I don't know. I don't have a lot of time on here, but I'll do it as fast as I can. So we'll go to, if it lets me, entire year. There we go. So we'll go to it was May 2nd. May 2nd. That's the last year. We're going the day before. So let's go to May 2nd. Let's see if it matters. Maybe well, I know you combine it with the chart. Just keep that in mind. You're combining it with the chart. So you're not just blindly doing something because it's one kind of indicator or something. We're buying the next day, but we're out by the close. Not that day's expiration, even though they would have worked. You're buying the ones the next day. So let's just go look. What happened the last 1550? It went down. Look at that. Not a lot. I wouldn't call that a lot. And it didn't have the same structure at all. Now, why didn't it have the same structure? Because of all the support. Not as tight a pattern as the following year. So, but let's just say you're wrong and it goes up. How much would you have lost? I bet not a lot. So you go to let's say the 500 puts. Yeah, they didn't do anything. You would have broken even. So when you're right, you made a double. When you're wrong, you break even. I'll do that any day. So everybody take care. Hope you found that enlightening. You can't do it with the Fed coming out Wednesday. It doesn't seem to matter, because it's midday. But I just wanted to show you that when the unemployment report, so when's the next one? You'll see the next one is coming up June 6th. So you might say, well, most companies buying back stock. They sure are. So most of them, not all of them, because let's see, April. Yeah, most of them are buying back stock. So because the earnings really start in July. So 5 weeks prior, yeah, they're buying back stock. So the June one will work as well. You just have to do it at the last minute. So take care. Thanks for listening to me, and I will